Hi everyone, today let's take a quick look at the retail sales data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So retail sales did come in better than expectations, which pushed up the dollar and pushed up the small caps. So let's see what we got. We got retail sales that were unchanged for June. The expectation was minus 0.3, so better than expected there, but still not growing. And as you would expect, the dollar index did go up on that, but that really didn't impact markets. Markets were generally strong, and the Russell continues to be the massive outperformer here over the past couple of days. And they don't mention it here, but the core number was expected to be 0.1, and we ended up getting a 0.4. So 0.3% better than expectation in both cases. Moving over to Max Pain, we got a 64 versus a 61, so another step higher here today. Momentum, still extreme greed. Strength and breadth in regular fear. That's a step up from the previous read, so that's good. As the rally continues to broaden, very little movement on the put-call ratio, still very depressed there. Volatility continues to go a little bit higher, but still considered neutral. It's above the SMA, worth considering there. And then safe haven demand stepped into extreme greed with the move that we saw in retail sales. And then junk bond demand continuing to sit in regular greed. Today was supposed to be relatively flat on seasonality, but we did see a slight step higher pretty much across the board. The Russell and the Dow took off to the upside much stronger, looking more like this NASDAQ chart. The Russell's supposed to underperform, but it's been so depressed relative to its peers that it seems like a rocket ship in comparison now. Moving over to the earnings calendar, United Health beat on the top and bottom, so did Morgan Stanley, so did Bank of America, and then Charles Schwab. They met on the top line, beat on the bottom, but they had a rough day. Their forward guidance was not great. And then for tomorrow, ASML, J&J, US Bank Corp in there as well. And then for Thursday, the big ones here, Netflix, Abbott Labs, Blackstone, Domino's Pizza, fun to watch, and then Alaska Airlines to round out the Thursday. Moving over to the economic calendar, you can see those core retail sales, 0.4 versus 0.1, headline number 0 versus minus 0.3. Previous numbers were also revised up, so that's good. Looking at tomorrow, you have core and headline CPI for the Eurozone, Fed Waller speaking, 20-year bond auction, that should be interesting. And then for Thursday, you do have initial jobless claims as well as Philly Fed manufacturing index. And that'll pretty much wrap it up for the week, as there's really nothing here on Friday. Moving over to Max Pain here, this chart looks a little bit different, kind of interesting there. Moving over to Max Pain, you can see 544, current stock price 564, so 20 points above Max Pain. Way more options in the market now, 3.2 million. Put call ratio came down a little bit, 3.65. Put wall at 550, call wall 562, so we're already above that level. Top of the puts 564, 565, which we are already there. So again, indicating that we might have reached the top 4 markets this week. We'll see how it plays as we go into that Tuesday, but we are getting into that top of the puts finish that we've seen many times in this bull rally. Could maybe get to 566, but again, that's like $1 higher, so not a lot of upside potential based on this chart. Moving over to the charts, looking at the S&Ps, you can see we grinded higher pretty much all day, threw some wicks to the 21 EMA and then went higher to finish out the day. And you can see what that looks like here on the daily chart, 0.59 to the upside, still can't get above that trend line. Didn't actually even test it here today on either chart. Momentum bullish, RSI bullish. You can see we can continue to grind along this level. 566.85 is that trend resistance still, so we'll see how it continues to play, but right now, still grinding price action, same as the last 3 days. Moving over to the Tasty charts here on the daily chart, you can see we hit that upper ATR band, pushed above it, closed at the high of the candle, which is interesting, 564.86, right at that upper level of the candle. Upper band is 563.33, so again, you don't tend to stay up there for very long. You can see it here, got above it, sideways choppy, got above it again, gave it all back, grinded back up to that level. So that is generally what we're looking for. We're extended here on the daily chart. It makes sense. And then looking at that 4-hour chart, you can see couldn't quite get to that upper ATR on the 4-hour. That's at 567.96. Doesn't mean that we can't push up to that and then give it back. Momentum starting to fade here. We had 2 candles of bullish. Now we're rolling back to the bearish side. Very little volume. Couldn't get above that second ATR, which is 565.53. ATR stops still bullish here on the 4-hour, 556.97. So Mixed signals, still grinding price action, starting to fade in that momentum. Moving over to the NASDAQ, very different chart actually. You can see 3 days of sideways choppy action. We did dip a new low relative to this low yesterday, but we caught all of the bounce there, got back above the trend line, bought that trend line break, and now we'll see if we can get the continuation up towards that 500 again. You can see it here continuing to grind along that trend line, held the level, held the 9 EMA. So we'll see if we can get a swing to 500. That's what I'm hoping for tomorrow. Then we'll see what happens after that. Momentum, not really confirming it right now, but the hourly chart definitely swinging to bullish. So short-term bullish based on the hourly, but still sideways choppy on the daily. Moving over to the Tasty charts, you can see 8 EMA, tested that level again, held support, rejected from there, looking for a little bit of an upswing tomorrow. We'll see how it plays. Momentum did step back towards bullish a little bit. ATR trailing stop 485.84, so still bullish on the daily chart. Upper ATR band 504.82, so definitely more room to the upside on the NASDAQ than we've seen on the SPY. You can see that here. SPY candle looks very similar to that 10 July candle, which we then gave a lot back on the following day. But now we're looking for a continuation back up to that upper band. And then looking at the 4-hour chart, still very different here. You can see we're still in bearish conditions. You have a low, you can argue a higher low here. Threw a bunch of wicks to this downside, which all got bought up. Closed right in the middle, looking for a swing to that ATR resistance at 499.98, which was right in that 500 range. So both of these charts to me say we should get a little bit of a swing up here as these zones did hold support, and then we'll see what happens after we touch that area tomorrow. Moving over to the Russell and the Dow, these were the rocket ships of the day, 3.41 and 1.81, just massive candles straight up. Gap and go all the way across the board. You can see it broke that 221 level, which we talked about in the previous, as the next level after 218 pushed right through both of those. And now we're headed to the next one, 226.01. Got some trend resistance there at 227.32. We'll see how that plays. Momentum off the charts. RSI super high at 80.85. Huge volume on this move as well. So everything that you would want to see that indicates this is potentially going to continue is still there. And then the Dow, similar thesis. We knew once this 398 broke, there was probably a lot of room for price discovery. Sure enough, that's what we're seeing. Huge move here, big volume, big momentum. Everything on both of these looks very strong. Let's go ahead and extend this one out now. I think we might be, no, not really that close to it yet. Probably going to need to find some trends to try to find some price levels to work with. And then looking at this trend line that I added here, marks the price action here, marks this top, and then marks this top. Maybe that's an interesting level. Maybe this is where we're going to find some rejection, or maybe we're going to push right through it to the next level up around 417. Moving over to stocks that moved today, we got Match Group jumping 7.46%. This is a very beat down stock. It was up around the 180s during COVID, and it fell down to 29.27 here, even lower on that lowest candle of the day. Low of the day there was 27.66, so very low, and since then we've rallied to around that 35 area. High of day today was 35.04. Next level for me, 36.28. This is a big move. Probably going to have more momentum. You can see volume strong, big momentum, overbought conditions already. Probably going to continue. All of these growth names are starting to see strength as we expect more cuts to come, and potentially the first one in September like we talked about in yesterday's video. And then on the flip side of that, you got Charles Schwab. They had earnings today. It was not great. The earnings themselves were fine, but the forward guide was weak. 10% down, huge volume, 34 million shares traded, average volumes between 2 and 3 million, so 10 times the volume. Next support 66.81. Probably going to touch that 200 at 66.15. Moving over to Apple and Microsoft. Apple was up 0.18, Microsoft down 0.98. Hit the trend line here on Microsoft like we expected it to, so that was a good call. This continues to look weak here. We'll see if it holds the trend. Absolutely could in theory. We'll see what happens. Momentum bearish, RSI bearish, not oversold yet, so it has more room to fall in my opinion. And then looking at Apple here, you can see inside candle, didn't quite get to that upper trend line yesterday. Definitely didn't get there today. 9 EMA sitting at 229.41. Super overbought conditions. It's been basically straight up here since mid-May, and we'll see what happens after this, but I suspect we'll see at least a little bit of a pullback over the next day or two. Moving over to Tesla and NVIDIA here. Tesla looking a lot like a double top. So you have a bottom looking to push that top formation, which means we should get up to this trend line here around 270, touch that, and then we'll see what happens from there. Momentum continues to fade. RSI also below the SMA, but still in overbought conditions. This looks like a lower high setup. So you have a high, lower high, rejection. 2 days down, still holding 125.17. This has been consolidating for a while. RSI continues to fade, momentum bearish. And once this breaks, I do think there's going to be pretty decent downside here to the 120 area, and then potentially the 55 there at 111. Moving over to Meta and Amazon, Meta down 1.28. This has been a bit of a dumpster fire over the past week or so. Momentum bearish, RSI bearish, hit the level like we thought, 489.67, held the level just by about 10 cents or so. Below it after hours, hit the 55 EMA. So this was the zone of support we talked about yesterday. Expecting this to break, highly traded zone there, 476.13, and then below that, the 144 EMA at 462.96. So seems like this is going to continue to trend downwards, probably not in a straight line, but we'll see how it plays. And then Amazon flat on the day, 0.16 to the upside, 21 EMA still hanging in there, 192.90. And you can see we're falling just a little bit after hours. If that 21 breaks, we're probably headed to 188.61. Moving over to staples and discretionaries, look at these, finding some pop here on the day, 0.96 and 1.79%. So staples back into bullish conditions for me. As long as we're above that 77.50 level, that's bullish. We got above it here today, closed above it, closed on the high. You would expect this to continue to swing off that kind of price action, understanding that we've been in this consolidation for a while. Remember, we got here at the beginning of May and we are still here towards the middle of July. So could absolutely see rejection from this area, but we held a pretty substantially higher low. Big up candle, retail sales pushing it up. And as long as we're above this, like I said, I think this could go a little bit here following that data. And then looking at discretionaries, big update there as well, pushed above the level 193.81. So technically that's bullish. You have some resistance in these trends around 195.39. Honestly, I thought we were going to hit it here, but then we pulled back, found support at the 9, so still a bull trend, but it doesn't give you a ton of upside. If those break, 197.14 is there, so we'll see how that plays. Momentum and RSI both bullish. So overall, both of these look good. Moving over to financials and oil and gas. Financials, again, on this rocket ship. They bottomed out here mid-June, and they have been straight up since then. New all-time highs, closed on the high, momentum bullish, RSI bullish, super overbought. Huge move on financials. This is almost at 10% up here. Currently sitting around 7.5% from this most recent low. And if you're counting back from the low in mid-April, then we are at that 10% range. So big move on financials, continues to go here. And then oil and gas, very slightly bullish, 0.13. I did take my profits on the day. We'll see how this plays tomorrow. I might reestablish on that, as I still think we're probably going to get a push to that 154.13 area. Moving over to oil and gold, we got oil falling, broke the level at 80.97, momentum bearish, RSI bearish. This is why I was a little bit hesitant on oil and gas stocks. The stocks look better than the commodity, but this doesn't look great. You have a high, lower high, structure broke here, 21 broke today, VWAP broke. So we'll see if we can find some support in that 79 area, and I'll continue to watch this. Gold, on the other hand, doing exactly what we thought. Saw this test, saw the momentum, saw the RSI going, thought this was going to break, and it did. Up almost 2% on the day. New all-time highs here for gold, and I do think it's going to continue higher. Moving over to RIOT and Marathon, these did exactly what we thought again. So 2 days in a row of massive gains, 17 and 10% for RIOT, and then 18 and 8 here for Marathon. Makes sense. Usually that second day is a little bit closer to half of the first day, but RIOT overshooting that half and Marathon just short of it. Almost hit the trend. That's what I was expecting. Didn't quite get there. RIOT pushing towards that 14 area. We're right at the highs here from mid-April. Both of these look strong, and they should have a little bit more upside, maybe 1 or 2 more days. Moving over to Breadth. Breadth continues higher, so 50-day Breadth headed towards this level up here around 85 in my opinion. 20-day Breadth, we're in critical zones already, 86.53, probably going to touch that. We'll see how it plays. We're at the highs now from mid-March. That was the peak before we saw the big down move. The high previously was up around that 86 area, overshot it just a little bit into the 89 to 90 range. We'll see how this plays. So there's just a little bit more upside. 20-day Breadth can hang out sideways for a while, a little bit more than the longer term ones. And then 50-day Breadth still has more room to that 83 area, which is what we saw at that same peak here in March. Moving over to the dollar, you can see that big up candle on retail sales, hit the level, rejected from there, basically straight down after that. Still tells me that the dollar is quite weak here. Tested the level, retest, reject. Momentum did swing to bullish just slightly, 55 EMA on the hourly holding at 104.23, but we're below all the EMAs and SMAs. Talked about this being a slight bottom here. We did get a rally off of that, so it was bullish. Still holding this zone, could be a decent setup here. Look for another push above 104, but as long as we're below that, I'm slightly bearish. So overall, medium term, still bearish. Short term, still a little bit bearish, but potentially finding some support. Moving over to yields, 2-year and 10-year, both cratering on the day. 0.92 and 1.72. 2-year continues to look like a falling knife, still expecting this to get down to that 4.25 area, which makes sense. Markets are trying to price in 2 cuts this year and at least 2 more cuts next year, which would bring us down to that 4.25. So the 2-year pricing that in. And if you do believe in that thesis, it's probably a decent time to buy into these levels, which is probably why we're seeing that 2-year yield crater. People are trying to get in at these higher yields for the next 2 years. And then similarly, 10-year, people's trying to buy in on that. Probably is already topped here previously, and it's probably headed towards that 4% area. Still need to see that normalization. You can see the 10-year still hanging in there much better than the 2-year, which to me indicates the 2-year is going to continue to crater. 10-year a little bit, but not nearly as much. Moving over to bonds, we got J&K finally doing what we thought it was going to do. Got to that upper level, closed above it, 95.61, beat it by just a penny there. So momentum bullish, RSI bullish. Everything says bonds are going to continue to go higher here. Got the candle break by 1 penny. Next level, 96.51. Pretty exciting actually to be out of this trading range. We got here mid-December. Now we are potentially breaking higher on J&K. Similarly here, TLT, big move up 1.41%, gap through the trend. Probably headed towards that next trend up here around 96.50. That is the level, and I think we'll get there. Momentum bullish, RSI bullish. Moving over to volatility, move index basically didn't move. Volatility went up again here today, about 0.5%. Went higher initially, gave some of that back, but this is still swinging higher, so something to consider. We saw the short-term charts, which look a little bit weaker on the SPY. Makes sense why the VIX might be showing a little bit of strength here as we go into those bigger earnings announcements with Netflix kicking off tech. So we'll see how it plays. Right now, the VIX is finding some strength, and this looks like a double bottom with the potential for a swing to that 1470 area. Moving over to my accounts, I made a few dollars, not a lot, not nearly as much as I should have. I rolled up pretty aggressive on the IWM to try to capture a little bit more money there. And then I actually reestablished some shares here on the Qs. Sold a 496 for tomorrow for almost $2 credit, which is pretty decent credit. That was basically at the money when I sold it, and you can see it's basically at the money here. After hours, we're down just a few pennies. Buy price was 496.12, went up a little bit into the end of the session, and basically that's flat now after hours. But again, protected down to 494, so we'll see how it plays. Overall, moderately bullish going into tomorrow's session. Let me know down in the comments section what you thought of retail sales and the move on the dollar and the growth stocks as well as the small caps over the last couple days. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.